Hey folks, Tom Chantal. Welcome to Tom's Trading Room and Optionetics. This is my market update for October 2018. So we come into October and we've got all kinds of things going on. We got a lot of catalysts that are happening. Got Q3 earnings coming out here starting this week. We have China. You know, that's the one left of the tariffs problems that we've had globally. So we've taken care of Mexico. We wrapped up Canada earlier this week. China is the big one. I do believe we may see something happen by the end of the month. But that is a catalyst that we still have to, or a hurdle we still have to get over. We've got midterm elections coming up, and although those happen in November, I think that the market's always a precursor to what things do, and I believe those catalysts, those midterm elections, are going to cause a little bit of volatility in the market for this month. But let me show you what I like. I like to look at trends, and I like to look at seasonality to help me shape up where the market may be going. So, trends. SPY, this is the S&P 500. Look at the trend on this. It's literally in a line that's going straight up, while the implied volatility on it just gets around the cheap end. This is great. If you love this move up and you think it's going to continue to happen, the options are cheap right now compared to where they've been, and buying cheap calls, you're going to get them a lot cheaper now than you would have gotten a couple months ago, or even back in June when they were twice as expensive. All right, but we also like to look at bonds, currencies, and commodities to try to get an idea of whether this trend is going to continue or not. So let's take a look at all three. The bond market is trending down. That's actually good for the stock market. It tells me that traders are getting out of bonds, getting into stocks. They're raising cash by selling bonds to put into the stock market. That's what's called a risk on play. And we see that happening right now with bonds. As long as the bond market doesn't drop out of bed like it did back in end of January, early February, then this is good news for the stock market. How about currencies? So Europe is not having the best of times when it comes to their economy, and that has been showing as of late. If you see what happened back at in the middle of August, where we dropped from, look at what happened. We dropped from 113 euro all the way down to around 108. We've come back up. This has actually created an inverse head and shoulders pattern. As far as I'm concerned, even if we stay where we are right now, that's actually good for the U.S. stock market. If we move higher, that's good for the U.S. stock market. If we drop down to new lows, that might cause some concern, but there would have to be a lot to happen here for that to occur in the month of October. So I think this is a bullish pattern we're seeing here for the U.S. stock market. Commodities. If you know me, I'm looking at oil. That's the number one commodity to help gauge the U.S. stock market. What's good for oil is good for the stock market, and look what happened to oil just this week. We broke above the highs that happened back in July, all right, and made some new highs. USO is now at 16. What does that mean for oil? That means oil is over $75 a barrel. And those of you that hit the gas pumps probably already know this, with a gallon of gas being where it is today. But if you look at the economy, you look at the consumer, right now this isn't bothering the consumer that much. I think oil would have to go to $100 a barrel for the consumer to take a really hard look at what they're putting in the tank and saying to themselves, well, I've got to put it in the tank to get back and forth to work, so it's got to come out of somewhere else. Right now, that's not happening. What's good for oil is good for oil producers. What's good for oil producers is good for the U.S. stock market, because those stocks will help to lift it. Finally, take a look at the money calendar for October. For any of you that have any concerns about the month of October being the worst time to be an investor in the year, this should prove you wrong, because every day on the calendar except for one shows more bullish opportunities in the last 10 years than bearish. And of those bullish opportunities, they only appear on this chart if 90% of the time in the last 10 years that they have moved higher, which they have. So I like this. I like the trends. I like the seasonality. In summary, when you combine technicals, fundamentals, and seasonals, it gives you an edge over most other traders who are out there saying, I think something's going to happen. All right? I don't use catalysts like earnings and like Q3 and midterms and China to predict price. What I rather use them for is potential risk points. So just keep them in mind as you're creating your trades. And finally, historical implied volatility, to me, is what determines what's the best option strategy to take. So on those individual stocks or on ETFs, if I'm looking at that red line and that red line is near its low for the pattern, I'll buy option premium. If that red line is near the high for the pattern, I'll look at selling, doing selling strategies, selling option premium strategies. To me, that's the right way to trade the options markets. All right. Hey, thanks everybody for a 7-day free trial to Tom's Option Tools, which does all of that and so much more. Log on to www.tomsoptiontools.com, and up in the top right-hand corner, you'll see the little link that can get you a 7-day free trial if you're new to Tom's Option Tools. All right, guys, I'll see you again soon. Have a great month here in October. And again, it's all about spotting the opportunity, creating the low-risk trade, and then planning, executing, and managing that trade. Thank you. We'll talk soon. Bye now.